I have been using this HYSA bank for 10 years, and I'll share the name of the bank with you later on in this video, but it was one of the best financial decisions I've ever made by moving my cash reserve from a traditional bank account to a high yield savings account. And look, I get the loyalty. I spent my teenage years walking into Bank of America in a greasy McDonald's uniform just to deposit a papered paycheck. Yes, that's how old I am. And I was with Bank of America for many years because that's all I knew. And throughout my Air Force career, I was actually all in on USAA and Navy Federal, just like most of you veterans watching right now. And I have nothing against these banks because they actually helped me out a lot during the government shutdown in 2011, and I'm sure they helped a lot of you during the most recent shutdown, but I would never use them to put my money away. And times have changed, and I believe your bank should have to earn your keep. Today, I don't use any of these old school giants for my personal cash. I've shifted my emergency fund, my travel money, and even my checking account into specific high yield savings accounts that actually work for me instead of the other way around. I'm going to break down the best ones for 2026, including two I personally swear by. Just so we're clear, not a single company is sponsoring this video or paying me to mention these names. This is just my straight up experience because I would much rather see you pocketing $300 in interest every year instead of the insulting $3 the big banks think you're worth. It's your money, you work hard for it, and it's time it started working for you. Now, before we get into the heavy lifting, we need to clear the air on what a high yield savings account or HYSA actually is compared to the traditional banks you grew up with. To start with, traditional banks like Chase or Wells Fargo or Bank of America usually offer interest rates around 0.02%. So if you park $10,000 in there, you're making maybe $2 in interest over a whole year. On the other hand, a good HYSA in 2026 is sitting around 3.3% or higher, depending on when you're watching this video. And with the same $10,000, you're looking at $330 in interest. The reason these online banks can offer so much more is simple. They don't have to pay for thousands of brick and mortar buildings. They don't have to pay for the light bill, the security guards, or the landscaping at 5,000 branches. They pass those savings on to you because their business model relies on efficient online platforms. It's all automated, who cuts their costs to the bone. Now, one thing to keep in mind is that HYSA rates are not fixed forever. They move with the Federal Reserve. If the Fed cuts rates, HYSA rates will eventually come down. If the Fed raises rates, they usually go up. That's just the reality. But here's the key point. Even when rates come down, high yield accounts almost always pay more than traditional savings accounts, and you're still winning. Even in 2019 and 2020, when the rates were at their lowest, I was still getting 1.1% from the HYSA compared to 0.01% in the traditional savings account. And that's still 11 times more than what you would earn with Chase, Bank of America, or Wells Fargo. And just to be clear, this is not market investing. There's no stock risk here, and your money is not swinging up and down with the market. But this also isn't where you grow wealth long term. This is where you park cash safely, earn a fair return, and stay liquid. This is where you safeguard your principal. And another big difference is fees. Most high yield savings accounts don't charge monthly maintenance fees due to lower operating costs. In contrast, traditional banks like Chase, Bank of America, or Wells Fargo often require a minimum balance or direct deposit to avoid monthly fees. So banks like Wells Fargo or Chase, if you miss the requirement, they're going to charge you every single month. High yield accounts usually don't play that game. With that said, you still have to read the fine print. Some HYSAs will charge a fee if your balance drops below a certain level or if you don't meet conditions to earn the top rate. I personally avoid those. And another thing people worry about is transaction limits. High yield savings accounts do limit how often you can move money in and out, and that's normal. They could charge you a fee if you exceed the number of times you can withdraw from the account. I personally chose the one with at least 10 withdrawals per month maximum. There are some HYSAs out there that limits your withdrawals to 5 per month, and I personally avoid those. Now, what about depositing checks or talking to a representative? Honestly, I've never had an issue. Well, maybe a few. But I handle all my check deposits through the mobile app now, which is a huge step up from my McDonald's days when I had to drop them off in person at Bank of America branch. And if I ever need help, customer service is there. Real people, not some robot or AI. It all comes down to choosing the right HYSA bank, and I always go with an online bank with proven track record. And what if you want to take out cash from an ATM? The online banks I recommend do offer ATM fee reimbursements, but there is a limit to how much they will cover. And I like cash as much as anyone, but I usually stick to 1 or 2 withdrawals a month to avoid extra fees. And if you're the type of person who needs cash multiple times a month, a good approach is to keep your savings in a HYSA, but keep your checking account with a traditional brick and mortar bank like Chase, Bank of America, or Wells Fargo, because they've got ATMs practically everywhere. Now, when you're looking for a new home for your cash, there are a few must-haves. First and foremost is FDIC insurance. This is non-negotiable. If the bank goes belly up, the government guarantees your money up to $250,000 per person or $500,000 for joint accounts. Now, you've probably heard about minimum balance required to earn a higher APY. The important thing is to look for a consistent rate, not just a promotional one. And honestly, a 3.4% versus 3.5% APY probably won't make a huge difference. But if you're comparing 3.5% to 3.8%, that could matter depending on your situation, like if you have a larger balance. Another thing to check is how often it compounds. Daily compounding will help your money grow faster than monthly or quarterly compounding. And what about transfer times? Just be aware that moving money between an online bank and a traditional bank can take a few extra days. And I still keep a Chase checking account just in case. And when I transfer money from Chase to my HYSA, it usually takes about 2 to 3 business days. And here's some other things you might want to look for. Does the bank let you deposit checks right from your phone by scanning them in the app? Will it reimburse you for ATM fees if you use an ATM that's not part of their network? And of course, you need to check out reviews of the bank's customer support before committing. Now, let's get into the bank I've personally used for a decade, which is Ally Bank. And I've been with them for 10 years for my personal checking and savings. And it's not perfect, but unless they start charging fees, I am staying. And again, I am not sponsored, no affiliate links, no money changing hands, just my own personal experience. So one of the things I really like about this bank is the interface. The moment I log in, everything just makes sense. It's clean, it's easy to follow, and honestly, it hasn't changed much over the years, which I actually appreciate. And there's no learning curve every time they roll out an update. And you can also rename each account by clicking customize in the top right corner, which sounds small, but it makes a big difference for staying organized. And when you look at my dashboard, you will see everything laid out perfectly or clearly, in my opinion. And my checking account, my emergency fund, my travel fund, my annual expenses fund, and my annual discretionary fund. Now, if you're wondering what I mean by an annual expenses fund, that's money set aside for things you know are coming and cannot avoid. I use that account for stuff like car insurance every 6 months, routine vehicle maintenance each year, and my annual car registration. And then there's the annual discretionary fund. That's for the fun stuff, birthdays, concert tickets, anniversary dinners, things that are not required but absolutely part of life. Keeping those expenses separate helps me enjoy them without guilt. And if you want me to break down my full savings setup and how I structure all of this, drop a comment below and I will make a separate video walking through it step by step. But anyway, at the time I'm recording this video, Ally is paying 3.3% in interest. Another cool thing about the interface is how transparent it is with my earnings. Right on the dashboard, I can see exactly how much interest I've earned so far this year. And it also breaks down my growth over the last 3 months and even shows projections for where that account could be in 1 year or 3 years. It is simple, but seeing those numbers laid out makes it very real, and it reinforces why parking cash here actually makes sense. Another feature I really like is their buckets, and honestly, this is a big reason I've stayed with Ally for the past 10 years. And my emergency fund is not just one lump sum. It's broken down into 6 separate buckets. each with a clear purpose. And I have a core savings account, which is where all the interest payments go, so I can set that money aside for taxes later. Then I've got buckets for emergency home repairs, family emergency travel since my family lives out of state, insurance deductibles in case of a car accident or a medical issue, a rainy day fund for things like a blown tire, and an unemployment bucket if my business goes belly up. Another thing to like about the buckets is how customizable they are. You can name each one, decide exactly what it's for, and set a specific dollar goal for every bucket. That way, you're not just guessing. You know when the bucket is fully funded and when it needs attention. It also turns your emergency fund from a vague pile of money into something more intentional and easy to manage. And that's why your emergency fund should always live in its own separate savings account. It should not be lumped in with travel money, discretionary spending, or anything else. Emergencies don't care what your plans were. And when everything is mixed together, it's way too easy to borrow from yourself and just justify it later. Keeping it separate creates a mental and financial barrier. And in my experience, that's exactly what you want when things go sideways. Now, several downsides you need to be aware of are that the account can go dormant if there's no activity for over a year. That actually happened to me back in 2017. My emergency fund was fully funded for the whole year, so I did not touch it at all for, well, at least a year. And Ally basically assumed I didn't exist anymore. Suddenly, I could not access my own money, and it took about 3 days of back and forth to convince them that I was in fact still alive, which was not a great feeling when the account holds your emergency fund, right? And at the time, I did not have a checking account with Ally, so the fix was simple. I opened one up and just to keep the relationship active. Now that there's regular activity going through my checking account, that issue has not come up again. And Ally no longer thinks I have vanished off the face of the earth. And do take note of their terms and agreement. One of them is that you cannot run a business through them. So no Airbnb income, no 1099 business payments. Otherwise, they're gonna cut you off. I still use my traditional bank for my fireside chat business stuff, which is perfect because I keep my business expenses completely separate from my personal ones. And one time, I ran into some trouble trying to withdraw cash while traveling abroad. That was on me though. I did not let Ally know ahead of time, so they flagged it as a potential fraudulent charge. And honestly, that could have happened with any bank, so I would not say this is a negative thing with Ally. And another thing is that the live chat is hit or miss. If you reach out during non-peak hours, you usually get connected in just a few minutes. But if they're slammed, like around tax season or the holidays, good luck getting through quickly. Could be an hour. And another important thing to remember is that Ally Bank does charge a foreign transaction fee on purchases made overseas. So if you're an anti-credit card person who likes to travel abroad with this Ally debit card, just remember that they will charge you for every transaction you make while you're in a foreign country. So now let's go to the other banks worth mentioning. And one of them is SoFi Checking and Savings. It is unique because it is a combined account that can earn up to 4% APY, but there is a catch. To get that higher rate, you need to have direct deposit set up. If you're getting your paycheck deposited there, you get the higher rate. If you're not, the rate drops. SoFi is currently running a promotion where you can earn up to $300 plus an extra 0.7% APY boost. And this bank is trying to be your one-stop financial shop and offering everything from student loan refinancing to investment accounts. I know I sound like an advertiser, but I'm really not trying to advertise for them. And if you're younger and you like the idea of having everything with one company, SoFi makes sense, but make sure you understand what you need to do to qualify for those higher rates. Next up is American Express, and most of you probably have one of their cards in your wallet already, and their high yield savings account is currently at 3.3% APY. The best part about Amex is the reliability and their customer service. They're not a startup that's going to disappear overnight. There's no minimum balance to earn that rate. And the interface is familiar if you already use their app. It's a set it and forget it kind of account for people who value a brand they have known for 30 years. Now, if you're chasing the absolute highest yield and you've got a bit of a nest egg, take a look at CIT Bank. Their Platinum Savings account is currently paying out 3.75% APY, but there's a catch. You have to maintain a balance of at least $5,000. If you drop below that, the rate falls off a cliff to 0.25%. It is a great spot for your real emergency fund that you don't plan on touching unless the roof literally caves in. The next one is Barclays. They're a heavy hitter in the banking world. In the US, their online savings is competitive and usually hovering around the 3.6% mark. They don't have a whole lot of bells and whistles, but they're stable. And for the business owners out there, I personally use AXOS or AXOS Bank for my business savings. They offer a great rate for business accounts, which is rare, and they have been very reliable for my operations. And if you're tired of your business checking account earning zero, they're worth a look. Now, we have to talk about the two old faithfuls of the online world, and that's Capital One 360 and Discover. And I'm grouping these two together because the ground shifted beneath them just last year. Because as of May 2025, these two officially tied the knot. Congrats, Mazel Tov. So while you might still see two different apps on your phone for now, they're playing for the same team. Capital One 360 is currently sitting at 3.3% APY. The big draw here is that they actually have physical branches and those cafes, right? You've seen one of those? And if you're the type of person who occasionally needs to talk to a person face to face, or you need to make a deposit of a stack of cash or something like that from a side job, Capital One gives you that option while still paying a rate that does not insult your intelligence. And Discover is also at 3.3% APY right now with no minimums or fees. And they're still best known for having some of the best customer service in the business. But I have to give you a serious heads up here on why you can never just set it and forget it with these big banks. I literally just saw this news on January 12, 2026 that a judge gave preliminary approval for a $425 million settlement because Capital One was caught playing a very shady game with its customers. And what they did is that they kept millions of loyal people in an old account called 360 Savings, earning a pathetic 0.3% interest. And meanwhile, they launched a brand new nearly identical account called 360 Performance Savings that paid higher rates we're talking about today. And they did not bother to tell the old customers they were being left behind, and they just let them sit there earning next to nothing while the bank pocketed the difference. Some estimates say they avoided paying out over $2 billion in interest that belonged to people like you. And this is exactly why I'm making this video. My big pro tip for you today is this. Bank loyalty is a one-way street. These companies will not tap you on the shoulder to tell you there is a better deal. Even if you're already with a good bank, you need to check every few months to see if they have launched a performance or plus version of your account. If you don't, you're essentially giving the bank a tip they did not earn. And finally, for the tech-savvy crowd, there is a Wealthfront, and it's technically a cash management account, not a traditional savings account, but they are paying a 3.25% base APY, and they often have boosts for new users that can push you near 4% for a few months. And they also offer up to $8 million in FDIC insurance by sweeping your money across several different banks. It's a cool bit of financial engineering for those of you with high-class problems, meaning way more than $250,000 in cash. So listen, don't just chase the highest APY you see on a random TikTok ad. Look for an FDIC insured, reliable brand with a strong track record. At the end of the day, your savings account is where your peace of mind lives. You want it to be there when the car breaks down, the kid needs braces, or you finally decide to retire early and buy the boats you've been eyeing on. And don't just listen to my opinion. Go out and read other reviews. People are not shy about complaining when a bank messes up. Find a place that respects your money as much as you work for it. So what's your favorite HYSA? Are you still stuck with a big bank paying you 1980s interest rates? Let me know. And this has been another piece of a video and we got a lot out of it.